What's up, everybody? As I've reported in past videos, the industry experts differ greatly when it comes to predicting the future of the housing market. And to me, this makes total sense. Depending on where you live, you could have a completely different experience when it comes to today's housing market. So today, we're going to take a look at one of the most bearish predictors, John Burns Real Estate Consulting, to see how they predict the future of home prices across our country using their proprietary Burns Home Value Index. This is really interesting because back in spring of 2022, they were one of the first to make a case for why the red-hot housing market could soon plunge into a correction in which prices could fall by double digits in many overheated markets. Now, you gotta understand, this call was really bold, considering at the time, Zillow economists were predicting that the U.S. home prices would skyrocket another 17.8% between February of 2022 and February of 2023. Cut to today in February of 2023, and we can all agree that Zillow was way off in more ways than one, and John Burns Real Estate Consulting was much more in tune with the future of the housing markets. In Lance Lambert's latest article in Fortune, he shares 4 charts from John Burns Real Estate Consulting, which show how the ongoing housing correction is shifting regional home prices since their 2022 peak. So let's just dive right in. After interest rates started rising dramatically in the spring of 2022, U.S. home prices started falling. Between June and November of 2022, the seasonally adjusted Case-Shiller National Home Price Index declined 2.5%. This may not seem significant since home values went up almost 40% in a lot of places during the pandemic housing boom, but the question is, how much more will U.S. home prices decline in 2023 before the housing market starts to recover? Take a look at this first chart, which shows how the ongoing housing market correction is shifting regional home prices according to John Burns Real Estate Consulting through December of 2022. All of the markets shaded in blue have yet to see price declines. If I click on San Francisco, the map shows a price decline of 10.49%, while in the DC area where I work, it shows a price decline of less than 1%. This is a huge difference in what's happening in different housing markets across our country, even with interest rates going up as high as they have, which is one of the reasons why I think that today's housing market correction is very different than the housing crash back in 2008.
I think this is the most significant financial crisis in the post-war period.
In 2008, we had a lending problem which affected every borrower across the country who was lent money that they could not afford, regardless of where they lived in our country. Once their payment increased and they could no longer afford to pay it, the loan went into default and the house went into foreclosure. And with all the foreclosures and short sales, the housing market started to tank and everybody's home values went down when a massive inventory hit the market with these new comps. Today we have other problems. A lot that started with the pandemic when the government printed a lot of money to help a lot of people during this unprecedented time, at least in a lot of our lifetimes. Add the lowest interest rates in history to buy a house and the housing market boomed. Cut to today, the government's trying to fight inflation by raising interest rates to calm the housing market down, which has caused a huge shift, aka a correction, which is affecting different places differently. Among the 150 major housing markets tracked by the Burns Home Value Index, 100 markets ended 2022 with local home prices below their 2022 peak. Meanwhile, 50 markets, including places like Milwaukee and Miami, ended 2022 with local home prices still remaining an all-time high. Take a look at the second chart provided by Fortune and John Burns Real Estate Consulting, which shows the shift in home prices since their respective 2022 peak. Among the down markets, 24 regional housing markets ended 2022 with home prices down at least 5% from their respective 2022 peak price. If you look at this list, the majority of markets with sharp price corrections are mostly on the West Coast. One of the reasons that these places are affected so much is because the inflated prices from the pandemic housing boom don't support the local incomes. Many West Coast housing markets were were already strained affordability-wise, and spiked mortgage rates simply pushed those markets over the edge. Another reason that Lambert cites in its article is a higher share of homes in these West Coast overheated housing markets are owned by iBuyers and home builders. And unlike primary homeowners, investors and builders are more likely to slash prices if sales stop. We've spoken about the failed iBuyer programs like Zillow and Redfin in previous videos, and Opendoor and OfferPad are in serious trouble. These companies are trying to offload their inventory before prices go down even more, and will cut their prices immediately to force sales quickly. And once you have those low comps, the rest of the neighborhood will have to lower their prices as well if they want to compete and if the sellers want to sell. Lambert's next chart shows the contrast between Chicago and San Francisco as an example of the bifurcated housing correction. During the pandemic housing boom, Chicago and San Francisco had similar paths. Both markets saw a surge in outmigration as people started to work from home. Both markets also still had a huge run-up in home prices as demand for space soared during the lockdown. However, the trajectory of home prices in Chicago down 0.1% and San Francisco down 10.5% diverged just as mortgage rates crossed 5% in 2022. It all boils down to affordability. Home buyers in San Francisco were already near their financial limits, while Chicago buyers had a little more breathing room to absorb the high rate shock. So affordability plays a major role in how much prices need to correct in any specific market. For example, the bubbly housing markets that went crazy during the pandemic housing boom, like Boise and Austin, Vegas, and Phoenix, all have sharp price corrections because the underlying fundamentals, meaning local incomes, can't support the inflated prices. Take a look at their fourth chart. Austin is down 9.5% from its 2022 peak. Boise is down 8.1%. Las Vegas is down 8.3%. And Phoenix is down 8.9%. Once remote migration slowed and mortgage rates spiked, those bubbly or frothy boomtowns slipped into sharp corrections. So where does the home price correction go from here? The one thing that everybody seems to agree on is that it just depends on what happens with mortgage rates. If mortgage rates stay high, the odds increase that prices will continue to go down. For the week ending February 2nd, 30-year mortgage rates ticked down to 6.09%, hitting their lowest level since September. The daily average was 5.99% on February 2nd. So if interest rates can stay below 6%, there's a chance the housing market could start to recover. Home prices are usually the last indicator to find a floor in a housing downturn, and we still think there's a good amount of time ahead of us until that happens, as long as mortgage rates stay 6% plus or minus. Rick Palacio Jr., Director of Research at John Burns Real Estate Consulting, told Fortune. He also says that he thinks that the new home side is going to get hit the hardest. Price cuts since the 2022 peak for home builders are typically much more significant than resale, especially if you consider the costs incurred by the builders to pay down the mortgage rates for the home buyers. I like to end the videos by just sharing my experience as a full-time realtor in this housing market, which is here where I work in Montgomery County, Maryland, and the DC area. Prices are still high. Good houses are still going in multiple offers over asking. I just wrote a contract last night with Toll Brothers for new construction in Bethesda, Maryland, where they disclosed to us that they are raising their prices for the next phase that they're releasing. So even home builders are doing really well now in February of 2023. I know it's different in other parts of the country, but I gotta keep it real for what's happening where I work and where I live. I do hope you get some value out of these videos. It's a lot of work putting this together, but I just think getting you the most up-to-date information on the housing market will help you make the best decisions for you and your family. If you did get some value and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It just motivates us to make more videos. Thanks for watching. I do appreciate it. Bye!